Thank you for joining us for our September 2016 Park City Market Talk webinar. I'm Ron Wilstein, a broker at Keller Williams Luxury Properties Worldwide in Park City.
And I'm Jeremy Wilstein, the buyer consultant for the Wilstein team. And we're here to share with you what's been happening in the world of Park City real estate.
All right, well, let's bring your attention to Vail. Jeremy, what's been happening with Vail?
Yeah, Vail's been very, very busy, so we're going to update you on what's been happening.
And then, of course, we will give you a Park City real estate market update, let you know what's happening with number of sales and prices and some changes in the marketplace.
And then the key to correctly pricing your property so you do actually sell it.
And then finally, we're going to share with you details about Park City's changing market as it will impact your real estate investment. So let's start with the Park City real estate market. Over the past 12 months, there's been 1,292 sales. This consists of homes, condominiums, and vacant land. This is all real estate brokers combined, and that is 165 sales less than the 12-month period the year before. It's an 11% decrease.
So taking a closer look, this is the comparison of closed sales, and we're looking at homes, condominiums, and lots. You'll see in all three categories, we are down in terms of number of closed sales from the same time period a year before. Homes down 8%. Condos 15%, and lots are down 9%.
Now here we're going to break it down a little more specifically. We're looking at the geographical areas of Park City and the Snyderville Basin, which is the county area of Park City. And the red bars represent September 2015 through August 2016. The silver, the 12-month period the year before. So we see when it comes to homes, down 25% from 188 to 141 inside the city limits, and just slightly up from 352 sales to 356 in the Snyderville Basin.
Condominium sales during that same time period were down 27% inside the city limits and down just slightly in Snyderville Basin.
And then looking at lots, we see we don't have that many lot sales within the city limits, but they are down from 32 to 25. That's actually a 22% decrease, but just realize it's not a lot of sales. That's the entire year of lot sales. In the Snyderville Basin, where there's more sales, down by 10 sales to 151 from 161, 6% decline. So let's turn our attention to prices because, of course, everybody wants to know what's happening with property values.
So this is another chart that we're looking at the median home sales price during that same time period we've discussed in the past. So look at that. Park City limits up 18%. The median home price in the city limits is now just under 1.6 million.
Wow.
Snyderville Basin, this is very surprising as well. It's up 11%, so both double-digit increases, and just shy of 960,000. I remember just a couple years ago we were reporting Snyderville Basin at about 650, maybe 700 now. It's flirting with that 7-digit mark.
Wow, it's just incredible. Well, we'll keep an eye on that and report every single month on that. Now let's take a look at condominiums. Median prices within the city limits has risen by 14%, all the way up to 625,000, and up 13% in the Snyderville Basin, climbing from 385,000 to 434,500.
Likewise, lot sales inside the city limits, even though we had about a 22% decrease in number of closed sales, pricing's up 5%, up to 630,000. Snyderville Basin up 30% to 430,000 from 329,750. There still was a number of sales of lots in Snyderville Basin. Keep in mind, there are some areas in the basin that have extremely high lot prices with great views, lots of acreage. So that could be skewing that data a little bit.
That's right. Now it's interesting when we look at the number of sales, which we first reported on, and now prices, and you see the number of sales declining and prices going up. The number of sales declining might give you the idea that the market is dropping off. However, with prices going up, it seems to suggest a different message. And in short, what it means is if you price your property correctly, you're going to sell it, and it's still riding up that momentum of appreciation. But this leads us to this next topic, which is the key to correctly pricing your property to sell. And we report on this about every quarter, and it's worth taking a look at this more carefully. The reason we report on the median sold price for each category, homes, condominiums, and land, is it often indicates what the market's willing to do. in terms of buying or not buying. So take a look at this. With this graph, we're looking at the median home sale price we reported in the Park City limits is $1,582,000. And now if you look at the number of months it takes for properties to sell either above that median price or below that, it's very, very significant. Absorption rate is the rate in which the current inventory gets absorbed by the marketplace based upon looking at the rate in the past year. If you list your property at or under the median sold price within the city limits, the absorption rate is typically 4 months. If, however, you choose a higher number, it goes almost up to 18 months, almost a year and a half. That's a huge impact in terms of how quickly you sell your property. Now, it doesn't mean that you want to discount your property simply to sell it, but it does mean that you have to take that into account because it is an indication of what the market is in fact doing. If we turn our attention to the Snyderville Basin, we saw that the median home sold price was $959,500. Again, if you list under that number, the absorption rate typically is a little bit over 4 months. If you list over that, again, maybe your property is rightly priced over it. You just need to realize that it may take up to a year for it to sell. So interesting information. If you're looking at seriously selling your property, we need to do the proper analysis and explain for your specific situation how this may or may not apply to you. Well, with that in mind, Jeremy, tell us about Vail and the specifics.
Yeah, so Vail's been very busy over the last couple of years. It seems like every few months they're snagging another resort in the United States or in Canada or Australia or Europe or whatever. They're really going after it, and they're hitting it hard. So many of you probably heard about this recent acquisition, Whistler Blackcomb Resort. The flagship resort, is that right?
Yeah, it really is, and it's really two mountains to take into account, offering over 200 runs, so a lot of terrain, a lot of snow.
Yeah, so the Canyons and Park City merger, that became the largest resort in the United States, and but Whistler Blackcomb is still the largest in North America. Similar layout with two different mountains and a gondola servicing the two. So it fits right in Vail's portfolio. They bought Whistler Blackcomb for $1.06 billion.
Billion with a B.
Billion with a B. And just to give you some correlation, they bought Park City for $182.5 million. I think Park City is a pretty good resort.
Yes, but that was kind of like at a sale price, huh?
It was. There was all the lawsuit going on and everything. But look at that difference in price and what they're willing to pay for that Canadian resort. Yeah, the deal's expected to go through this fall, so anytime. Now, unfortunately, the Epic Pass this year will not be available for Whistler Blackcomb, but the following 2017-2018 ski season will. In addition, Vail added many resorts in Europe just on September 1st that will be available on this year's Epic Pass. So we've got this chart shows the resorts that are added in France and also how many days you get skiing there and at each resort. It's amazing. Here's Italy. They added one resort there. And then Switzerland. And finally Austria. So these are where skiing was born in Europe, and Vail has gone with their Epic Pass and now offering skiing in the US, Canada, Australia, Europe, Japan. It's incredible.
It is. You buy one Epic Pass, and not only do you get all the resources available here in the U.S., but around the globe.
Yeah.
It's
you got to quit your day job if you want to take full advantage of this thing.
That's right. And just think how strong your legs will be if you do.
It's true.
All right, well, let's turn to our final topic for this webinar. Park City's real estate market is about to change. Certainly the indicators, the signs are ahead, so let's take a look at it and discuss the implications of this change. We are moving from a limited supply, double-digit price appreciation market to a frequently overpriced market with buyers choosing not to pay the next record high sale price. And we really need to stress this. This is the truth that you need to hear about our current changing market. If you graph it here, what we're seeing is that buyers are afraid of paying what sellers want today. Again, realizing sellers are pricing at the absolute next highest price. No reason not to, based upon the history of this double-digit appreciation that we've been reporting on. However, it's starting to stall, and what's happening is Some of these buyers are fearing that prices may drop off in the next 6 months, and nobody wants to buy a property only to see the value drop off quickly. So we want to look at what is the sentiments that are driving that change and that attitude adjustment.
So first off, the national news is anticipating a real estate slowdown. There's been numerous headlines in the newspaper, from Aspen Real Estate taking what they call a sustained nosedive in their luxury market. Other luxury information coming that shows a real estate slowdown. We've got a summer slowdown in Manhattan luxury market. And then finally, overpriced homes may be slowing down the Los Angeles market. So what it seems like is sellers are going after those next highest prices, and it's like all the buyers got on a conference call and said, you know what? We're not going to keep paying these prices, and this is what we are seeing right now.
And so many of our buyers and our sellers live other places than Park City. They're impacted by their local news on the real estate as well as the national news, and they tend to project it onto the places they vacation, one of which is Park City. So the second element is
the buyer's belief that Park City prices can't keep going up at the pace they've had in the recent years. Probably, the last 4, 5, 6 years. I mean, prices have been appreciating well, double digits. And at some point, while it's nice, it's got to slow down. And that's where we feel like the market is right now.
We're certainly being asked more often when we report on the data, which is all very factual. Gee, how long can that keep going on? And so that's now starting to penetrate the marketplace. So what does this mean? It means a couple things. Number one, property owners who want to sell need to not be so aggressive, or perhaps the term might even be greedy, in pricing their properties to sell. It was very valid for us to say, look, you can price higher, not only give yourself some room in negotiations, but let's see where the market will be willing to pay for your property. Now with this new attitude change, it's not advisable to necessarily do that in the same fashion that we did even 6 months ago. Also, once sellers start negotiating with interested parties, they need to consider carefully about putting their deal together. The reason why is if they don't put their deal together, there's a possibility with this apprehensive in the marketplace that it may take a while for their next offer to occur, and they may be looking at lower prices. We've reported in previous months about all the new developments occurring in the Park City area now and over the next couple of years. That's more choices for buyers. Sellers want to keep that in mind.
And third, you want to carefully consider a total market overview analysis. Not many agents here do this total market overview analysis. Most do what's called a CMA, or comparative market analysis, which looks at your immediate neighbors and determines pricing based on sold data in your immediate neighborhood. What we do is we go and do a TMO, or a total market overview, and we kind of get in the seat of a buyer that might be looking at homes maybe between 800 and $1 million too. They're not just going to be looking in your neighborhood. They're going to be looking at other similar neighborhoods that might not just be right next to you. So the total market overview takes a look at the entire market and determines pricing based on that, in addition with the comparative market analysis. And number 4, you want to negotiate the highest and best price you can and be content with that price. No single sale is going to change your life.
All right, so let's turn our attention real quickly to the 10% pricing rule. This is something that I adopted a number of years ago after watching the market carefully as a guideline for sellers who are thinking about marketing their property and trying to price it correctly. We found that an acceptable list price is pricing up to 10% above the fair market value of the property. Fair market value is, of course, a fair market value, but you want room for negotiation, and if the market will give you a higher price, how high can you go? Mm-hmm. The rule of thumb has been 10% above the fair market value is as high as you want to go. An unacceptable list price is more than that 10% mark. What happens is the market tends to stop, in fact, sometimes come to a screeching halt, and you don't sell your property. So let me show it to you on this graph here. If you list your property at a fair market value, you will likely sell it very quickly within the first 3 months of being on the market. In fact, you're likely to have multiple offers, and that can be attractive, and you may want a fast sell. On the other hand, if you choose going up to that 10% mark, it will probably take you 6 to 9 months to sell your property. If that works within your time frame, that's great. You got to give more time in order to get someone to step up and pay the price that you want. You may, however, want to sell it quicker, so you might choose to list it 5% above fair market value, reducing the time on the market to, say, 3 to 6 months. So you just want to keep that in mind. You as a property owner have control over how quickly you sell your property based upon the price that you list it at. Key thing is, don't list over 10%, because in all likelihood it will rarely sell, if it sells at all. So I think it's time to adapt to these elements that we're bringing to your attention. Jeremy, what's the best way to adapt?
Well, the best way, you don't want to sell your property for less than you should get in today's market. But you want to be aware of asking too much and sabotaging the ability to sell your property at all. So it's very important to price correctly, especially as we're seeing this change in the marketplace, because if you've seen, we don't anticipate anything that happened in 2008, but there were some owners that held out a little bit too long and they wrote it all the way to the bottom.
Let's take a look at emails that we as realtors get on a daily basis from other agents representing sellers. Here's what they look like. They'll come and they'll in our emails, and they'll arrive and they'll say, great price reduction, now $997,000. But what you may not see is the fact that this is a $52,000 price reduction. That's huge. Next email arrives. This one says, sellers say, bring all reasonable offers. Again, you zeroed in, and over the period of the listing, they've reduced it $195,000. Now, it wasn't all done in one reduction. It's a couple different reductions, but it's an example of pricing a property too high, not getting the response, and coming back with a price reduction. And at that point, buyers say, gee, what's wrong with the property? It's not selling. Here comes another email. 50,000 price drop for Labor Day. This one came out right before Labor Day. How much was the reduction? Just slightly over $50,000. So if you go too high, this is what can happen to you. Don't want to do it. This is what we're seeing in today's Park City real estate market. If you want more information on pricing, we couldn't cover it all here, but you can go to a webinar that we created just on pricing your property right. It goes into that 10% pricing principle in greater detail. Watch it at viewparkcityrealestate.com/price right. And you can always invite us out. Doug and I, who handle the listings and the marketing of properties for our team, are happy to come out, visit with you, share with you the data that's relevant for your property, answer any questions you have. So don't be reluctant to take advantage of that. With that in mind, if you want to learn how much your property is worth, simply go to our website, viewparkcityrealestate.com. From that homepage, scroll down to the section entitled, What is your property worth? And simply fill out the short form there. Let me just show it to you real quickly. Here we are. This is the home page for our website. You just scroll down a little bit past the Start Your Park City search, past some of our properties and webinars, and you'll come to this section here. Learn what your property is worth in today's market. Very simple. It would take you less than a minute to fill in the blanks. Come all the way down to this section here. Choose the first one, which says Contact Me Now for a free property value assessment. We'll reach out to you, arrange a time to see your property, give you that information. There's no cost or any obligation. If there's other topics that are of interest, just select them there and click the green button, and we will reach out to you and help you out. So it's just that simple.
All right, well, if you have any questions on our presentation today, there's lots of information, especially this change in the market, which should spur a lot of questions as to, do I sell now? What's buying? All kinds of questions should come out of this webinar. So email us at Ron or Jeremy at thewilsteinteam.com, or if you'd like to give us a call, we're available as well.
That's right. And if you want us to call you, just include your phone number and the best time to call. So thank you for taking the time to watch our webinar. We appreciate it. And as we sign off, enjoy the next couple of slides here.